Hey y'all. Um, you're seeing me on here, but you're also seeing me in person. My friend Kristen Gunderson with Gunderson's Bookkeeping is joining us. She was going to be at camp with us, but if we understand anything, it's kids and activities. And her son is actually involved in, was it Taekwondo?
Taekwondo, yep.
And he is at a meet on the day that she was supposed to come, the day you're seeing this, and he needed to be there to qualify for state. So we are doing this over Zoom. Um, Kristen is going to tell you just a little bit about herself and do a short presentation, then we'll get into the Q&A. So it's
All
all.
right. Well, thanks so much, Connie. I'm really glad to be here. Sorry I couldn't be here in person. Yeah, I think we're going to state. We're going to Dallas. We'll be in Dallas on Saturday, the day of
Oh,
the event. And then if he gets first or second, we'll be going to nationals in Charlotte, North Carolina, in like around
oh
July
wow.
4th-ish. So very exciting. All right.
Yes.
Well, about me, first off, I'm a mom to two amazing boys, married. This will be our 20th year anniversary. And because of the boys, I started a business back in 2012, a bookkeeping business. It started off as Gunderson's Bookkeeping. We switched the names a few times. Now we're Gunderson CFO and Bookkeeping. And we started off with bookkeeping and payroll and taxes, and we've morphed into offering CFO services for small businesses because every business needs a CFO, but we just can't afford it. Like the big Walmarts and stuff, and then also tax advisory. And then within this year, I also got my EA. So I'm not a CPA, I'm an EA, which means everything taxes. I can represent anyone to the IRS if they have any tax needs. The only thing I cannot do is financial audits, but most people don't need financial audits. All right. So I have like a 10-minute presentation prepared, and these are just some things that small business owners should know. And so one of the big things that has come up lately is the big beautiful bill. So I wanted to go over that a little bit with y'all. What business owners need to know. Everything in this bill, I hate to say it, it primarily affects W-2 earners. There's not a lot of things that benefit small business owners. So there's not a lot of things I can help with the big beautiful bill. And actually have a YouTube page, and I've actually been going over some of the things that actually hurt the small business owners. One of the things is like if you are bringing in meals to eat for your employees for like your benefit, 0% write offable now. So that's one thing that's really hurting people. Like if you want to have those meetings with your employees, you need to take them to the restaurant. And then like a lot of businesses will buy like, or construction owners, they will buy food like waters, drinks, coffees for the break room or out in the field, and that's 0% write offable now too. So I'm along with that the YouTube page. I'm just giving little tips along the way. I have a whole series on the big beautiful bill, but one of the things, so I'll just touch a little bit on it because it doesn't really help the small business owners. It's helping the W-2 owners. Um, so the majority of the bill is designated to benefit W-2 earners. There's things like no tax on overtimes, no tax on tips, and expanded benefits for seniors. And like I said, I've actually done quite a few YouTube shorts explaining everything along the way. For business owners specifically, there are a lot of new headline deductions in this big bill, but the bigger impact for business owners is really indirect. This bill also increases the IRS funding for data and enforcement, which means more technology, more comparisons, and more follow-up questions. And that's exactly why the rest of what we're going to talk about today really, really matters, of what I wanted to talk with y'all about. So while the W-2 earners may benefit from the headlines, business owners still win in the same way they always have, through planning, structure, clean books, and documentation. So tax season problems, what are like the big tax season problems that people run into? They're actually created, like people are like, oh, it's February, it's tax time, it's March, April, it's tax time. But that is not when the problems are created. The created January through December. Like if you're coming to me March, April, May, after, during tax season, after the year's done, there's not much planning and strategy that we can do. Everything that's already happened, whatever the result is you're going to pay taxes on it or get a refund. So one of the biggest misconceptions I see every year is that taxes are a once a year event. They're not. February is when the problems are discovered, but January through December is when they're actually created. The decisions you make right now, it's what's going to shape your 2026 tax return. The IRS, okay, this is something that's really, really important that I want small business owners to understand, is the IRS has changed the game. And so when I was talking about all that money that they have, one of the biggest shifts for business owners, what we need to understand is that the IRS has decades of tax return data. They have all this data on us, and now they're going to use AI to analyze it. They know what's normal for your industry. So I'm talking to a whole bunch of people who create mums that have a mum business, craft businesses. So they already have your data and others just like you for years. And they know how much money you're making, like what income brackets you're making, and then what the expense. So like how much like a person in your industry that makes how much revenue that you make, they know, okay, this is how much is on average what you should have in supplies for cost of goods sold, how much on average you should be spending for computer, IT, accounting, like all that stuff. They already have the averages for you. So now that they know what's normal for your industry and every other industry out there, at your revenue levels, they're going to be comparing your tax return to what is normal. And if it's not normal, like I would expect to be getting letters probably starting this year. So if anything looks out of the normal, like say there's a ton of travel and on your tax return, but maybe for your income data, for your revenue that you make, maybe normal is like one conference a year and that's maybe 15% of what you bring in. I don't know what normal is, the IRS does. But what's going to happen is if there's like wildly out of range items on your tax return, I would expect a letter to be received. So here's a real live AI example. So say you own an HVAC business. I know I'm talking to people in the mum industry, but say the HVAC business, the normal travel expense is 12% of gross income. And on your tax return, you report 25%. So what's the IRS going to do? They're going to send a letter requesting clarification. And just because your tax return gets flagged, it doesn't mean that it's wrong. It just means that it's under review. So what's going to happen is you're going to take that IRS letter to your CPA or EA tax preparer, whoever did your tax return, and you're going to give that to them, and then they're going to start asking questions. And once they if you're taking your tax return or tax information to a tax preparer, an EA, CPA, it's not their job to sit there and verify. Their job is they are doing your tax return based off of the information that you give them. So the first initial one, like it's based off of the P&L that you gave them, or the piece of paper with all your expenses on it. It's based off of that. That's how they're preparing your tax return. They do not have to go in and verify anything. But if they get this letter, they're going to have to start asking questions. So then they're going to start asking questions. And I've seen everything. I've seen where people have taken their family on a vacation on a cruise. Was it business related? Not in any way, but yet they wrote it off through the business. So when your tax preparer starts asking you those questions, that's when they're going to be like, oh, this isn't correct. And yes, this was off. And then they're going to have two options for you. Um, so basically, the options are going to be one, I'm not doing this. Like, um, it's your responsibility as the tax person who's paying the taxes to provide the documentation. And I've already discovered that it's wrong. So either one, I'm not signing off on this, that this is correct, or two, we're going to have to get audited. And I guess there's a third option. The third option is you can go at it at yourself. So again, this is why documentation is so important. And so that like if it were me doing your tax return, I'd probably be like, yeah, we need to amend this and put the correct amount. And like, you know what? We're just going to be like, oh, this is off on their calculations or whatever. And we have the proof that we can. So let's just amend it to the correct numbers that should be taken out the family vacations or whatever it is and get it done. But if you leave it to the third option of, you know what, IRS, like, come on, let's get an audit done. The person who did your tax return ain't going to stand by you. Like, they're going to be like, because legally and ethically, they can't. If they know something is wrong on the tax return, they can't sign off on that anymore. Or like we could lose our license. Like that's how bad that is. So if you decide to go and do it your own, you've basically opened up a can of worms to the IRS of, yep, come look. And then they're going to start wanting to see every receipt over $75. And if they find abnormalities, it's not just going to be 2025 or whatever year they're questioning. It's going to go back. And if they think there's fraud, there is no 7-year limit. Like they can keep on going back until they think that they have everything they need. So that's the part that I wanted the small business owners to know. Like it's not to scare you guys or anything. It's just like, hey, we really got to be on the lookout for this, and that's why documentation is really really important. So just to remind you what happens after that letter, whose responsibility is. The tax preparers are preparing using the information you provide. Tax preparers rely on the books and records that you give them. The business owner is responsible for documentation. The IRS requires the taxpayer to prove expenses are legitimate, and the burden of proof is always on the taxpayer. Returns are prepared basically off of your profit and loss or whatever you're giving your tax preparer. And if the IRS triggers, it could trigger a deeper review, and the questions have to be answered truthfully. So it goes back to bookkeeping and why bookkeeping is so important. Bookkeeping is your defense. It's not just data. Clean books mean fewer questions, and consistent. You want to be consistent with your categories. So like when y'all are buying mom supplies, like it's a cost of goods sold. Like that is, you are basically buying all that stuff should be in cost of goods sold. So you want to be consistent. Like when you're paying for your internet, like always have that go towards an internet or utilities category. Don't be moving things around and switching things up. So being consistent with your categories means a lower risk. Real-time documentation, like this is really really important. It, we are very big on, I want to help you guys like weekly, monthly to get your stuff done. And that's what you guys should be doing. You should have an accounting software. There's plenty out there. There's QuickBooks Online. There's Xero, there's Wave, like whatever is convenient for you for that you could hook up your bookkeeping to, where you're seeing the transactions come in, categorize them immediately. And again, I like QBO. It's kind of expensive and I don't like it as much as I used to. But what I like about it is I can snap a picture with my app, my QBO app. And once, so when I'm at Walmart buying supplies, or I'm at the restaurant taking my team out, I literally just snap a picture of that receipt and it's stored there forever. And I don't have to do anything with it after that. Like I could throw it in the trash if I wanted to. But that way, that receipt, that documentation is there. And like I said, the IRS, if they're going to audit you, they're going to ask for anything over $75. They're going to want to see the receipts too. So to be doing your bookkeeping, if it's not, if you're not hiring someone, you be doing your bookkeeping on a very consistent basis instead of in January and February when you're trying to get your little report out to your CPA. And it's like, I think this is how much we did. Like you want to be looking at that more consistently. So bottom line, good bookkeeping and record keeping makes your tax return defensible. And here's some documentation the IRS expects, and this is every year, not just in 2026. Can you prove it? So the mileage log is a big one. I use Mile IQ. That's what I recommend my clients use. You swipe right if it's business, you swipe left if it's personal. And then once a month I can print that off, all my business miles, and then you get reimbursed. I think last year was 70 cents a mile. Might be like 72 and a half or 73 cents a mile now. It goes up a little bit every year. When you're going out to eat with meals, having meals, write on the receipt who you went out with. So I just took my team out. I wrote every single person who was at that table and then what we talked about. It was an after tax season party. So an appreciation thing. So if you're doing it with a client, the IRS wants the client's name. Obviously, you're discussing business. If it's a potential client, the IRS wants to know, did you win that business or not due to that mill? Patterns that create problems. Waiting until you file your taxes to ask questions. Mixing personal and business is a huge no-no. It makes it really, really hard for bookkeeping when both personal and business is coming out of one bank account. Have a business bank account, have everything business income come into it and your business expenses going out of it. When you need to pay your rent, buy your groceries, buy something for your kids, you can do a draw from your business account to your personal and then buy that personal thing out of your personal bank account. That is the biggest tip I can give anyone, is having that separate bank account, but then keeping it separate. That's the other key. Assuming software or a CPA is your strategy, it's not. If you're going just to get your taxes done, they're not talking any strategy with you. Strategy costs extra. Strategy is a lot of extra work. So assuming that your CPA, EA, tax preparer is going to give you tips on what to do, it's not likely. They are literally just preparing your taxes off of what you gave them. And then chasing those quick tax tips without any context. So I can sit there and talk to you about hiring family, about the Augusta rule, the home office. I can sit there and talk to you all about quick tax tips, but people are getting them off of TikTok and whatever, and they're not giving you content. So yes, they're all real. They may not apply to you. They may apply to you, but the key is that there's a lot of things that you have to do. So like if you wanted to use the Augusta rule, there's like 5 things that you have to do in order for that to stand up in court, or if the IRS comes knocking. Yes, you can pay your kids, but there's certain ways you can do it depending on which tax entity you're on. So don't be following TikTok. Like, you should be talking to someone. Like, if you really want to know how can I lower my taxes, talk to someone like myself, because it's not just, yeah, start paying your kid. Like, you have to have certain things done, or if you get audited, it'll get thrown out and then you owe taxes on that. All right, key takeaways before I get to all the questions and stuff that Connie has for me. What to focus on 2026. It's, only 4 months in, so we have plenty of time to work this entire year, right? So make sure that you have clean, consistent bookkeeping. Get your documentation done in real time. Like I said, for my clients, if they're monthly bookkeeping clients, I'm in their account, not me personally, but we are in their account weekly doing their bookkeeping for them. That way, if we see a Venmo transaction from Monday and working on them Friday, we can ask, hey, what was this Venmo transaction for? And we can get that coded correctly. Numbers that make sense for your industry. And again, I don't know what the percentages are for your certain industry or any industry, but like, I really expect to start getting those IRS letters for some clients, or like, I expect those to be coming. So we'll have to keep an eye on that, and who knows, maybe chat can tell us like what should travel be for your industry with your percentage. Like, we'll have to figure that one out. And then strategy is built before tax season ends. Like, once December 31st hits, there's nothing else that we can do this year to help save you money. And remember, the goal isn't to avoid taxes, it's to stop overpaying them. And I will have my slide up so that you guys can reach out and contact me. But Connie, I am ready for you. What questions have people asked that you would like me to answer?
Well, I'm glad that you went through all of that first because you answered a few of them. So let me pull up my list. Um, QBO, that's QuickBooks Online, correct?
Yep, QuickBooks Online.
Um,
And there's desktop still too, but I like the online version because I can do anything I want to from my cell phone now, even including snapping those pictures of
right.
receipts.
Um, I before we get into the questions, your business, say our ladies are interested in having your help with their taxes and things. You said you're going to put up, and maybe we'll get some business cards or something.
Yeah, that's a good idea.
Uh, because I was asking Kristen, I'm like, do you just deal with local people? She's like, no, most of my clients are all virtual. So
Yeah.
it doesn't matter where you live, you could have her help.
Yeah. I mean, I have clients from Florida to Vermont, Washington, Nevada. I literally have clients, thanks to COVID, all over the United States now.
And just so you know, she's a Yankee. I give her hell for that.
I'm from Wisconsin.
She got here as quick as she could.
I sure
So,
did.
okay. First question is, do I actually need an LLC when first starting?
So that's a really good question. And it's really, I don't want to say hard to answer, but there's some things that you can take into consideration. Are you just doing this as a hobby? Like, or you, so that's one question. If it's a hobby, no. Is there a high chance of me getting sued from doing this? If there's a high chance, yes, let's do the LLC. Because the LLC, it doesn't do nothing for you for taxes. It protects you from getting sued.
Personally?
Yeah, it's
Okay.
audit protect, like it's legal protection from losing your home and everything,
Okay.
from getting sued. Um, so those are the first two questions I would ask. Like, are you, is this just really a hobby and you might make a couple $100 here, a couple $1,000 here, or are you actually going to be working this full time, or trying to work it full time and turn it into an actual business? If you know for sure you're going to do that, go ahead and open up the LLC to begin with, because once you, if you do it later down the road, you're gonna have to get a new EIN number, and it just makes things more complicated. When you get a new EIN number, you have to open up a new bank account. Remember, I already told you, open up a business bank account. And then if it's high risk industry, for sure, open up that LLC to begin with also.
Okay. Um, and that was what's the tax differences between the LLC and a sole
Nothing.
proprietorship? Nothing.
Absolutely
It's
nothing.
just legal protection against you personally losing everything you own if something happens with the business.
Correct.
Okay.
Yep, the
Um,
LLC is just for legal. It gives you no tax benefit whatsoever. It's still going on to your personal tax return on a Schedule C, and
mhm.
then you're still going to have to pay the employer and the employee's side of the Social Security and Medicare. So I think that's 15.3% for both of them. So you're going to have to pay at least 15.3% on your net income of what income minus your expenses equals your net income. It's off of the net income. And then also that net income gets added to your gross income for taxable income. So if you have a W-2 or your husband has a W-2 job, it gets added in there too. So, yeah, no tax savings with an LLC.
Okay. Um, you talked about the EIN. Do I need an EIN right away, and what is it used for?
So the EIN number, like if you're just doing this as a hobby, you're going to be using your social security number. Like, and it is for like, say you hire a cleaning lady or a marketing lady or a guy, an accountant, like a bookkeeper, like anyone who you are paying for labor. And if it's $600 or more, you're going to have to send them a 1099 at the end of the year.
Mhm.
If you just use your social security number, your social security number is going as the employer side, the one who's paying the person. So if you don't want your social security number going out on say 1099s, to your contract laborers, that's when I would get an EIN number if you're not going to go the LLC route first.
Okay.
The other thing could be sales tax. If you have to pay sales tax, if you have an EIN number, that would be the number that would go to the state for, hey, here's my company name. It could be a DBA, like Connie's mom's, and then here's my EIN number. And then if you go and get a sales tax exemption letter in order to get your supplies, not pay sales tax on them, that sales tax exemption number is the number that you would be giving to Walmart or wherever you guys buy your supplies from.
So it protects your personal social security number.
Yeah, because if you don't have the EIN number, you have to use your social security number.
Right.
I know privacy is big
Yes.
these days.
Okay. How do I register my business properly in Texas? Does this registration expire?
So if you don't go the LLC route, you'll want to do a DBA. And again, it could be Connie's mom's. So what you'll do is you'll go to the courthouse. I would call them the county clerk, and they'll tell you where to go on the website, what form to download. But you'll want to get a doing business as a DBA. And so your top line would be your name, then your DBA is whatever name you want to use, and then the mailing address. And again, if you like privacy, I'd get a PO box. But that is only good for 10 years. That DBA is only good for 10 years. If you go and get an LLC, that is open until you close it.
Okay. I didn't know that. I knew that the DBA expired in 10 years because I just had to re-up from the catering. So,
Yeah.
okay. Are there any local or state requirements that new businesses often miss?
Hmm. I would think the sales tax would be one of them.
Yeah.
And that would be as simple as going to the Texas Comptroller's website. They have a sales tax number, and you could call them and literally tell them, hey, I'm thinking about opening up a business. This is what I'm going to do. And they will tell you if you need to charge sales tax on that or not. Pretty much if you're selling any product, you need to charge sales tax. If you're offering a service, the answer is most likely no, but it changes industry by industry. And Texas is the state of Texas is very complicated. Like if you're in this industry, it's these rules. If you're in this one, it's these rules. And then
Right.
if you're in this industry, it could have 4 sets of rules, and it depends on if it's commercial, residential, new, remodel, whatever. So it's just as easy as calling. And if you're coming from outside of Texas, I definitely would have to call the state to even find out what the state laws are for your state and industry.
Right. So we'll stick with the sales tax part since we're on there. I One of the questions was how often do I pay the sales tax? Um, and I it took me a while to learn this. I was paying it quarterly, um, because that's what I was always told, pay it quarterly. But the majority of my business is not taxable except for the mums, right?
Yeah.
So if I do cookie orders and I don't give you a spoon to eat it with, it's not taxable, which is it's ridiculous. Some of the, I mean, I enjoy that, but as long as I don't give you a fork to eat it with, there's no sales tax on it,
Yeah, so that's the way to go.
right? Let them provide their own forks.
Yes.
Here we go. Anyway, um, so I do yearly now because
Yeah.
really the only couple of my caterings are taxable, but the majority of my taxable income sales comes from the homecoming mums.
Yeah.
So there's nothing to pay quarterly on that. It's seasonal.
Yeah.
So
So To answer your question, all goes back to how you fill out that form when you're filling out the sales and use tax form and how much you expect it to be taxable. And then, based off of how you answer those questions, you're going to get a letter from the state of, hey, guess what? Starting this month, you're going to start having to pay sales tax and it's due by the 20th for last month. And the majority of the time, unless you say you're just going to be making thousands and thousands of dollars every month, they're going to have you on quarterly to start off with.
Mhm.
And if you get higher sales, I can't remember off the top of my head, but if you're paying more than 2,500 a month, they're going to move you to monthly.
Mhm.
And after a while, like we have we do honey bees and stuff like that. Honey isn't sales taxable, but when we decided to do lip balm with the beeswax, then those the lip balm turned into taxable.
Right.
So they started me off quarterly. So now I'm having to pay quarterly sales tax.
Of a dollar.
Exactly. I mean, the majority of the time I'm paying zero in sales tax because we don't even have any lip balm anymore. But
Right.
I have to wait for that letter from the Texas comptroller to switch me to yearly. I can't make that decision to switch me to yearly. They have to send me that letter.
Right.
And then when I go to log in, when it switches to yearly, then I'll get to go to yearly. Otherwise, you most likely are going to start off with quarterly for sure. And then depending on how little or how much, they will move you to monthly or yearly.
Okay. Um, what taxes will I need to pay as a small business owner, and does that change based on the county in Texas?
Okay. So, the number one thing is you need to find out if you need to pay sales and use tax. And you're not really paying that, you're collecting it from your customer, you're holding it, it's a liability, and then you pay it to the state. The next one, um, and I'm just pretty much assuming everyone has mums. Like we're not talking about RV parks or hotels or
No,
Airbnbs or
bumps.
anything.
Right.
But if you have one of those, you need to call the state because there's separate stuff for that. So then the next taxes would be outside of sales and use would be your personal taxes. So it goes back to that net income I talked about again. Your income minus your expenses equals your net income. Whatever your net income is, you are going to be paying, if you have a net income, you are going to be paying self-employment taxes. Again, that's the Social Security and Medicare taxes for the employees and the employer side because you're both now, which is 15.3%. And then you also, that whatever that net income is, it's going to get added to your federal taxable income, so your AGI. And then whatever tax bracket you're in, I mean, you could be in the
Adjusted
10%
gross income.
adjusted gross income. Yep. Um, that will put, I mean, that will, I don't want to say that will tell you what tax bracket you're in, but you can go look them up on if you're married, filed jointly, or if you're single, had a household. It'll literally tell you like how much each tax bracket is. And then if you know you're in, it goes like 10, 12, 20, 22 or 24. And then I think 22, 24, 32, 39. But it all depends on how much revenue you're bringing in, like all your W-2 income and your business income, that all gets added together for your taxable income tax bracket.
Okay, I'm going to talk about tax bracket for just a second,
Okay.
and you can correct me if I'm wrong. But I've had to explain this to my husband. I've had to explain this. So we have tax brackets, right? And
Yep.
say the 12% tax is up to $100,000. I'm just throwing out numbers, right?
Okay.
So you can make up to $100,000 and that would be taxed at 12%. Now, if you make $110,000, this first 100,000 is going to be taxed at 12%, and the $10 is going to be taxed at the next highest. So you're
Yes.
not going to go directly from paying 12% on 100,000 to paying 15% on 110,000.
Yeah.
You're going
It's
to
all
only
tiered.
pay the higher tax on the amount above that lower tax bracket.
You got that right, Connie. Good job. Yep. Yeah. The first tax bracket's 10%, and it doesn't not go nearly high up to 100,000. But your
Sorry, I was
example
just
is
throwing
very
stuff
correct. Yeah.
as everybody's talking about. They raise my insurance, and that just puts me in another tax bracket. So I actually and they give me a raise, and then they raise my insurance, and it just evens out. So I don't want the dang raise. And no, 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 that's not how that works. Okay. Um, how much should I set aside for taxes each month, or should I set aside all of the sales tax I charge? I'm gonna say yes on that.
Sales tax, like if your busy months for homecoming and stuff, whatever you're charging on sales tax really should be put aside immediately. So if you have, I don't know, $250, $500 worth of sales tax that you collected, go ahead and put that aside immediately, because that's not your money at all. You owe that to the state.
Would you
Um,
suggest doing a totally separate, like checking or a savings to pay that out of?
You don't need it to be in a separate account, but if you are like, oh my gosh, I got 2 grand in my account or whatever it is, I can spend all of that. If you are that type of person, like I got money in my account, I'm going to spend it. You definitely want to move that to a savings account where you don't look at it. And speaking of I'll give you guys another big tip: profit first. That is my I read that book in 2017, and I myself am on it. I'm still on it, and I got several of my clients on it. Any of my clients that are like, I never have any money for taxes when taxes are due. I spent all my money, or they're like, I made all this money, but I have nothing to show for it. It's because they're eating out a lot, or they're like, oh, I got it, so I'm gonna buy this truck because I don't want to pay taxes on it, and then they have no money in the account. So Profit First by Mike Michalowicz. Do I have it over there? I do have it. Okay, this book right here, this is the
Look,
book I
Becky G,
recommend.
it has a pink or purple piggy on it. You'll love that.
Yep.
Sorry.
I recommend every small business owner read this book. And and remember, because I could tell you, yeah, if you're in the 12% tax bracket, make sure you're withholding 12% of all the revenue that you get. Um, but ideally, you have expenses that go against that.
Yeah.
So it could be more like 5% that you need. 5% of the money that's coming in, you need to put into a tax account and save till when you owe taxes, and then it's sitting there. So that's the biggest tip I can give anyone. I absolutely love Mike Michalowicz. He has lots of different books out there, and he's hilarious to listen to. So you can read the book. I would read the book and get the Audible, and he just makes it fun and entertaining. So that and he has worksheets that will literally help you, like, if I'm bringing in this much money, how much should I save for taxes at tax time? So that's the book I would recommend reading.
Okay. Um, we've already done that. What items I sell are actually taxable? So pretty much all of them. I can answer that one. It's not the only items that are not taxable to sell are like food items. So everything that we make as a mum maker is taxable. A crafter, it's all taxable.
Yep.
Um,
So
how
speaking of that, because you guys are charging taxes and all those mums, you really should, like, wherever you're buying your mums from, fill out the sales tax exemption form.
yes,
For that way, you're not paying the sales tax when you buy the material.
because can't you, if you pay sales tax on something, can't you deduct that from the
You
sales
can.
tax you've received?
Yes.
So that's why you need a Kristen.
Yeah.
Because and I learned that but whenever I first started, I was paying sales tax on things and then collecting sales tax, and it
You're just
kind of
helping out the state of Texas there.
right, it kind of offset each other. on a little bit. Does it offset 1 to 1?
No, because your sales tax includes your labor also. So I'm gonna just assume, right?
Yeah,
You're charging, I don't know how much you charge, $100 for the mom, and they're getting charged sales tax on the $100. That includes all of the supplies that you bought
right.
and your labor. So the end user, whoever the end user is of that product, that's who needs to be paying the sales tax. So make sure that you submit that sales and use tax certificate to whoever you're buying it from, and then it will save you so much headache from trying to figure out how to do the the quarterly sales tax report and then put the credits in there of calculating. Oh, I bought, I forgot, I got from Amazon and they charged me sales tax, and I bought from Walmart and I forgot to give it. And then you're having to sit there and add up, oh, okay, and here's $22.05 worth of sales tax I paid, and then putting that into a credit. It makes it way more difficult to do that, to try to take that credit.
Um, if I sell on Etsy website, etc., how does the sales tax work? Is it different using a marketplace like Etsy versus using my own e-commerce like Shopify?
So we're kind of going down a rabbit hole I don't really want to get into. But technically, if you sell on Etsy and you are selling to someone in Louisiana,
You're supposed to charge their sales tax,
you're
right?
supposed to charge their sales tax. So you need to get set up with the Louisiana State Comptroller, figure out what their sales tax is. And like I said, Texas is complicated. It's nowhere near as complicated as some other states because they have parishes and then there's a parish tax. And if you're selling to someone in New York City, gosh, they have a New York City tax, and Washington. Like it's just like so I would keep it in whatever state that you're at to make things simple for that you don't have to go and get 50 other state sales tax certificates and have to do it for all of the states.
Okay, now that just brought up another question for me. If they came down here and bought it from where it was made, they would pay this sales tax.
Yes,
But because it's online and it's shipped to them, it's to where the end user is and not where it's made.
it's supposed to be wherever it gets shipped to.
Okay.
Yeah, which makes things a whole lot more complicated.
This
And
is why I don't do Etsy. um, we already asked about the separate bank account. What records should I keep from day one? Everything.
yeah, your corporate documents are really, really important. So that EIN number, because that EIN number is going to tell you when your tax return is due and what tax return you're supposed to do. I'm just assuming everyone's Schedule C on a 1040, but who knows? Maybe you set it up for that. You need to do a 1065, which is a separate business tax return. But that piece of paper is going to tell you what the IRS is expecting. If you get an LLC, you'll need that LLC paperwork. If you have an LLC, you should also have an operating agreement that says the rules for your business. Like, hey, I am, this is how we're going to operate. We are going to have a home office. We are going to bank at Cadence Bank. We are going to pay our children like health insurance. Like literally, that operating agreement says how you're governed. Like it's me and my husband. It's whatever, who makes the decisions. What I'm supposed to call myself. Am I a president? Am I a CEO? Am I like, what am I? Am I just a member, like owner? Like, what do I call myself? Like that will have that in there. And then if you also have an LLC, then you're supposed to have annual meetings. So then you have annual minutes of, oh, I just opened up a new bank account. First National Bank switched to Cadence now. So now I have a Cadence bank account. And I'm, you know, in those minutes, you would talk about the things that you're going to change in your business. Like, oh, you know what? We're going to start hiring an employee. We're going to have a VA. Anything that's really important. Like, I'm going to open up a savings account. I am, again, I'm going to start paying the kids. This is what they're going to do. Um,
Wow.
again, have the home office. Like, it, those, like, if you have an LLC, and again, the LLC is to protect you. It's nothing with tax savings. It is to protect you. But if you do not treat this as a business and you get sued or audited or whatever, and it's all about protection. If you don't do the things that this LLC is required to do, then the judge is going to be like, well, you're not, if you commingle your stuff, that's the number one reason thing to pierce the corporate veil. If you don't do your annual minutes, meetings, if you commingle your funds, the judge could be like, well, you haven't treated this as a business from day one. Why should we treat this as a separate business? Sure, go ahead, give them the house or the car, or whatever. So if you have that LLC, there's things that you need to do to treat it as a business in order for it to stand up legally. And then your tax returns, when you do your tax returns, obviously keep that for a good 7 years. And any receipts for $75 or more in case you get audited.
Wow. Okay. How long should I keep receipts? That's another
The,
question.
the same answer. Like if they can go back 7 years, you'll want to have 7 years worth of receipts.
Okay. Now, is there a simple system or app you recommend for tracking income and expenses? You kind of went over that a little bit, but
I still recommend QuickBooks Online. I know it's not as price friendly as it used to be, but I really like that I can use it from my cell phone. I can use it at the office. Wherever I have internet, I can use it. So that's the number one thing I recommend. And it's also, in my opinion, user friendly. There is another app out there. It's very big in Australia, and it's more budget friendly, and it's called Zero, and you spell it Xero. I can't stand it though. We use it for a few of our clients, like that just have a few transactions a month because I want to save money, and I can't stand it. So those are the two most popular for profit and loss and like a balance sheet.
so if they were your client and they had the QuickBooks online, you would just be able to access that, and that's how they would get their information to you.
Yep. Yeah,
Okay.
there's literally a spot where you can invite your accountant and you can invite up to two accountants for free. They don't take one of your user spaces. So you can invite a bookkeeper, you can invite a tax person, and you're good to go. And it's no extra charge.
Awesome.
So do you want to be on video? Because you're not.
I'm not. Why?
Not on video anymore.
Well, what happened?
I don't know. There you go. You're better now.
I didn't click anything. um, what should I do now to make tax season easier later? And I think you probably
Um,
went over that a lot,
yeah.
but just something
Yeah,
quick.
the number one thing is to get an accounting software. Again, I recommend QuickBooks Online, and I would learn how to use it. And you can connect your bank accounts. There's bank feeds. But again, you need to learn how to use it because everyone like QuickBooks Intuit was like, oh, it's so easy. And the so easy I see come to me, and everything's coded to uncategorized expense or uncategorized income or uncategorized asset. Like they don't code anything like, oh, I bought supplies, let's code it to cost of goods sold, or oh, I paid for the cell phone, let's code that to cell phone. As simple as that. I bought paper for the printer, code it to office supplies. I went to the restaurant, code it to meals. They don't take the time to actually go in there weekly. I would go in there weekly. If you want to be more OCD, go in there daily. But go in there at least weekly and be coding things for everything that hits the bank. That's what's in the bank feeds, your income, code to income. And if you want to separate out, like Connie has, catering, she has mom's crafts, like she can separate them out by income if she wanted to, instead of just like one big line item. That way she knows, like, oh, this is how much my catering business is doing. This is how much my mom business is doing. And I don't know if you have other crafts out there, but that's what I would do. That is the number one thing. And then at the end of the month, once the bank statements come out, you need to reconcile to make sure that you didn't miss anything. Because a lot of times, what I will see is people will be like, oh, I went to Walmart, and they'll put it in. But then when the bank feed comes in, they'll add it again. So it's in there twice. If they don't reconcile, they won't know that it's in there twice. So that's the number one thing I would say, though, is get QBO or any other software you want that you can work with, and start doing your bookkeeping and reconcile, and then you will have financials, and then actually look at the financials. The second thing, if I were to tell you to do something, get the Profit First book, read it, start implementing it. That way you actually have money at the end of the year to pay your taxes. You're making profit, and every business is in business to make money. I know people don't want to pay taxes, but if you're paying taxes, that means that you're making money, which is really good instead of just working for nothing.
Right.
And then the third thing I would tell you to do is to get the Mile IQ app and start keeping track of your miles. So um, I'm assuming most of y'all work from home, have the business at home. So if you are at home and you're going to Walmart to buy supplies, that round trip is tax deductible. If you are going to drop the kids off at school, that is not tax deductible. That would be a personal miles. If you're going to meet a client, going out to eat with a client, or dropping off a mom at their location, going to this conference, that's all miles that are write offable. And again, last year they were 70 cents a mile. I think they're 72 and a half cents. That adds up really, really quick, and will help add to your expenses, which will reduce your net income and will help you pay less taxes.
The conference
Regardless,
itself is all Mum Camp is tax deductible.
yeah, mom camp is tax deductible. Even you driving there or you flying there, it's a write off. Your
So
hotel stay, the food there, the conference itself.
everything is included
Okay.
in our conference. So all the food,
Yeah.
the stay, and everything is included, but the travel and the
Travel.
snacks that you're bringing,
Yep.
the supplies you're buying at camp,
Yep.
because vendors there, all of that is deductible. So you're welcome. Okay, I think that may be it. Let me look through these one more time. Oh, here's one. Um, this is like, what can I write off? Can I write off things like supplies, equipment, or part of my home? Are there things that I use for my business in my home that I can write off?
Okay. So that's a really good question. There is, the answer is yes. So anything that is ordinary or necessary for you to run your business, you can write off. And it depends on what industry you're in. So, for instance, I tell this. We used to do daycares as bookkeeping clients. Daycares can write off toys and food. No other business can write off toys and food that I can think of off the top of my head, like going to the grocery store. Like, obviously, Connie, yours you can write
Yes.
off food because it's normal and necessary for you to have the catering business. But
Right.
most other businesses, who can do that? So it really depends on your business. So any supplies, like all that stuff in the background, the stuff to put the supplies on, all of that is write offable. Um, if you need to buy a printer, if you need to buy a laptop, if you need to buy a tablet, and you're using it for the business, it is you can write that off. And then let's talk about the home office. Again, this kind of goes back to if you're just a DBA, you don't need to do this, but if you're an LLC, have that. I'm telling you right now, go pick out a really nice restaurant that you want to go to and have a meeting with your spouse, maybe for your anniversary or whatever, but talk business. And these are things that you're going to talk about. We are going to claim the home office on our tax return. That is one thing that we want to do. So now that that's in your minutes and you sign off on that, now you can start doing that. That, and then how that works is there's an easy way to do it and a hard way to do it. The easy way is you get like $5 a square foot for your office. So this is my home office. It needs to be used exclusively for business. So the hard way is you take the square feet of, you need the square feet of this space and then of the entire house. And you're going to put that into your tax return. I think it's an 8829. It'll ask you for that stuff on the home office, and then it's going to calculate the percentage. It may be 5%, maybe 10% of your home. I don't know what it is. TurboTax can do that for you, or your tax preparer. And then you are going to put in your mortgage interest. You're going to put in your home insurance. You're going to put in all your utilities. If you need a new roof or new windows, like you're putting that stuff in. Here's for the total house. Like if you need to, when I painted the blue wall there, it was used just for here. So there's things that are, this is for the entire house. Like a maid comes, the lawn maintenance comes, and then that's where you use the percentage. Or if I'm painting this room, that entire cost is going just to this room, and we're writing the whole thing off. So the tax software can calculate that. But again, you have to have good records to know, oh, my electric bill was, I don't know, 12,000 for the entire year, or the water bill. If you have an alarm system, we have a well, so if we need to have the septic repaired or the maintenance or whatever, that goes into there. And then your cell phone use. So cell phone, instead of it being a percentage, what you want to do is pay for it out of your personal, but then keep track of how much your line is, and then say for the entire year, I think I use my cell phone 50% of the time for business. Okay. And then say, I don't know, $600 for the entire year. So I'm going to write off $300 for my cell phone. So, internet, you need internet in the house in order to work. And then again, anything else that is, and I already told you about miles, but anything that is ordinary or necessary for your business. Again, y'all shouldn't be buying toys for your business because you're not selling toys unless it's going on the big old mug,
Yeah,
little tractor
we
or
do that.
something.
Yeah, we
But
do.
yeah, you know, anything that you would normally need, it you can write it off as an expense.
So I have kind of a unique situation here because we have our home and two businesses on this property. So I have my catering kitchen, my craft space, my cookie room, and I have my storage for everything. And that's like 1,000 square feet.
Yeah.
And then I have Michael's barn with all the lawn equipment and things like that. Plus, we have some of the catering. We have deep freezes. I have two or three in here, plus, we have two more. So, to get our percentage of the light bill, which it should be more because I know everything I have in here takes up more electricity than what I have at my house because our business stuff is actually way more square footage than our house is. But I have to figure out the total square footage for all the buildings on the
Yeah.
property
Yeah,
use
your house and
electricity.
all the different buildings.
And
Yeah.
then I figure out what percentage my building is, and that square foot, that percent is what I get on my taxes for this business. And then I figure out what percent Michael's building is, and that percent is what we get on the internet and the
Yeah.
light bill and the taxes and stuff like that. So I'm so super happy that I don't have to do that myself. Um, yeah. Anyway, so it it's not something that you want to do on your own, is what I'm trying to say. I tried
Yeah.
it. I tried it for a long time, and I create things. I make mums. I make cookies. I make candy. I make food. I freaking hate dealing with money. I hate dealing with taxes. I hate dealing with paperwork. I hate it. I hate it. I hate it. I also hate cleaning. There are certain things that I'm absolutely willing to pay somebody else to do so that I'm not sitting and stressing about it.
Yeah.
So, or you just have kids and make them do the cleaning.
Yeah.
Anyway, so, okay, is there anything that you want to end with?
Um, Not really. Kind of like what you were just talking about. I'll just touch a little bit on that. Um, One of the things that if you want to grow your business, you need to take stuff off of you. And what you were talking about is delegating or
Yeah.
deleting. And delegate what you can delegate, delete what you can delete. And one of the things that is really great to outsource, because creative people, they hate numbers. They hate all that. So we are here if you do need a bookkeeper, if you need someone to do your taxes, like that, we can handle that. If you want tax strategy, I love that stuff. Those are like my VIP clients. Like bookkeeping and taxes kind of go to my team, and I just oversee things. But one on one is the CFO and the tax advisory of what can I do to reduce my taxes? What's not working in my business? How can I fix this? Those are the people that I love working with. But bookkeeping and taxes may be one of the things that you delegate. And if you need help, we are here for you. That's literally why we started this business, is to be able to help other small businesses thrive. And once you're doing all the things that you love creating, love selling, love talking to people, um, your business thrives that way. When you like take the menial tasks that you hate off of you. Um,
Right.
do what you love doing, because it does grow your business. Like um, everyone's like, oh, it's so expensive. Like like I'll just do it myself. But at the same time, something that takes you 8 hours a month to do may take us 2 hours a month to do because we're made to do it. And then you could
Right.
spend the 8 hours making, I don't know, eight more mums at $800 a pop. Like, I don't know. I don't know what you guys charge, or
We don't
but
charge $100 most of the time. Um,
I'm just saying, you know,
she's a boy mom.
I
I'm
am.
just saying.
Yep, I am a boy mom. And
I'm not going to ask for a group discount because we get asked that all the time. Can we get a bulk discount? No, it takes me the same amount of time to do all of that.
yeah,
Um, and we also have to remember that time is money, and
exactly.
um, it might cost you a little bit more, but it will save you time and frustration and maybe audit and
Yeah,
heartache.
I'm kind of concerned about the whole AI stuff. I mean, that really shocked me when I learned about it, and I learned about it in like October. But it makes perfect sense. They have all the data.
Right?
Why not use it?
I wish they would have given AI a little bit longer tryout before they, of course, they've
They were
probably been
using it
trying it
before
out for a while.
the IRS and the government were using it long before we even knew it existed.
I know. I know.
Yeah.
So,
But anyways, thank you so much for having me today, Connie. I really enjoy these conversations. I wish it were in person. I
right.
love helping small businesses, and y'all have a great day today. Enjoy making your crafts and learning and mingling with people, and ultimately growing your businesses.
Thank you, Kristen.